Hello friends, good evening. Today is 30 October 2025, Thursday, and it was a Sensex expiry day today. Okay, today really it was a great experience to me, and I have learned really a valuable lesson today, and I would like to share the same thing and my experience that I had today with all of you. I request your kind attention. Please listen to me very carefully because this is very crucial thing. Only after deep research and deep analysis and great observation I came to learn about this thing. See, yesterday I did the analysis on daily time frame, and here I am using 5 days and 22 days and 44 days moving averages on my chart, on my daily chart. Okay, 22 days means monthly, 44 day means bi month. These are the three EMAs I am using, and also in conjunction to these EMAs I will strictly follow the price action. Based on these two factors, I was very clear that the market is about to come down. And also the main thing what I want to show you is that the MACD, the MACD, the attitude and the difference between the MACD on 21 October 2025 and on 29 October 2025 was narrowing, and this thing was directly indicating that the market is going to take a dip even though it is a small one. By this I successfully predicted that the market will come down today. Okay, but what I made a mistake, what I assumed wrongly is that the speed of its coming down, the speed of its coming down and the method that it will come down. In these two things I made a mistake. I thought that the market, I mean the Sensex, will come down today sharply in the morning and I can book the profit, or at least it will trend slowly. How it will trend? I thought that it may trend like this. I will draw and I will show you. Instead of coming like this, I thought the market will come like this. Please notice it, notice the difference with the actual market and the one I expected. Like this. The difference is has really make a big difference. Okay, the difference has really make a big difference, because even as per my expectations the market fell down around 600 points, but it did not fell in my expected way. It fell down 600 points minus 590 minus 590 points, but it did not do as I expected. So what happened here? Here it completely changed the thing. thinking that the market will come down, what I did, I bought put here, but I bought put of OTM. That is the biggest mistake I did. I thought that the market will come down in the straight way, but it did not come down. What happened? It did a journey of zigzag like this. That's why the OTM did not generate any profit, instead it incurred loss. But what we have to consider, if we would have bought the ATM in the first candle itself, supposed to be ITM. If we want, we can buy the ITM put options, but at least ATM. But instead of doing that too, what I did, I bought OTM. Because of this wavy structure of the market today, all the premium was wiped out. But if we have gone with the at least ATM, if not ITM, at least with the ATM, that is at 9:15 of 30 October 2025, Thursday, the Sensex opened at 84,750.9 and it made a high of 84,906.95 and close was 84,778.33. Even if we buy the ATM put at the closing of first 5-minute candle, that means when the market was at 84,778.33, the ATM would be 84,800. So if we have bought the ATM 84,800 put, what it would have happened, even though the market made so many waves, by the time of closing, at the first 5-minute candle, at the closing of the first 5-minute candle, the 84,800 put was available for 190 rupees. Okay, but by the close of the day, it ended at 396 rupees. So 396 minus 190, right? So we made the profit of 206 rupees on 190. Means how much is it in percentage? In percentage, 206 divided by 190%. So it generated the profit of 108%, even though the market moved in wavy structure. Okay, but assuming something that the market will go 600 points lower, as it went 500 points lower, assuming that market will go some 500 points down, at the time of closing this one, 800 minus 500 or 800 minus 400, I mean 84,800 minus 400, 84,400. So let's say 84,400. We are expecting that a market will go to, okay, even if we see from the previous close 600 points, okay, where did the market close? 85,036.51. Let us assume it 85,000. 85,000, we thought that the market will go 600 points down somewhere around. Let's say 500 points down, and we will buy 85,500. So 85,000 minus 500, it is 84,500 put. Let us say if we will buy 84,000 I will load in this second window. Okay, 84,502 of today's expiry. Where did it go? Let us see. We bought in the first candle, 9:15 candle, closing at 81.3. So 81.3. First of all, let me type the gain percentage here. How much was that? It is 396.95 minus 190.9 divided by 190.9 percentage. It is 107.93%. Profit percentage from first 5 minute candle, from first 5 minute candle to last 5 minute candle closing in the ATM strike, from the first minute candle closing to the last 5 minute closing, the ATM strike was how many percent was it? 107.93%. Was 107.93%. But what happened with the expected OTM strike price? Let us see now. As per our daily analysis, we thought that market is about to fall somewhere around 600 points. Market means Sensex here. As per our daily analysis, daily chart analysis, we expected that or forecasted, we can say, that the Sensex is about to fall somewhere around 600 points from the previous closing. That means the closing of 29th October 2025. So the market closed at 85,000. 85,000. Where did the market close on yesterday? It closed at 85,036.51. Let us forget about the 36.51. Let us make it round figure of 85,000. So 85,000 minus 600. So it will, the number will come around 84,400. 84,400. So if we assume that 84,400, the market is about to touch 84,400, and just we will buy the option of 84,500 put, what will happen? What happened actually today? Because of this wavy structure of the market, this wavy structure, this one, like this, this one, again it went up, again came down, again went sideways, again came down, again went slowly up, again came down, again went up. Because of this structure, actually, as we thought, the market really went 600 points down, but not in the direction, not with the speed as we expected. It went in a very choppy structure. That's why what happened, even if our 84,500 put, which was OTM, some 500 points OTM, because we were expecting 600 point correction. That's why if we buy 500 points OTM, how much result did it give? Let us see. Same on the closing of the first 5-minute candle. First 5-minute candle we bought it at 81.3, okay, and last 5-minute candle closing 95.8. The price of the 84,500 put of Sensex closed at 95.80, and our cost was in the first candle, the closing of the first candle, it was at 81.30. So the difference is, it generated the profit of 14.5% only. So let us check the percentage. Divided by 81.3%. It was only 17%, 17.83%. So how much? So I will correct here. 17.83% only. Okay, only. Even if we have bought 2 strikes away, let us check the rate of return for that. Okay, now I will load the 84,600 P. 84,600 P. Let us check the percentage rate of return again. On the closing of the first 5-minute candle, we bought it at 108.85. On the closing of the last candle at 1525, it closed at 195.75. Let us see, 195.75. So 195.75 minus 108.85, 86.9 rupees. It gave us the profit of 86.9 86 rupees 90 paise per unit. So divided by 108 point, how much was that, the opening? 108.85 was the opening. It gave us 79-80%. It gave us the 79.83%, which was 4 strikes OTM close. Okay, so this is the percentage. Even now the ATM gave us about 28-30% more returns than 4 strike away OTM. Away OTM. Okay, so I need to make changes in the previous slide as well. That's why I will again load the 84 500 put. Okay, 84 500 put. If we have gone just with the 84 500 put, the 5 strikes away previous close gave us the profit of only. So this is the thing, dear friends. I think you all have understood now how important is the strike price selection. Don't worry about the value of the premium. Don't worry about the value of the premium. Even though if you are investing 1000 rupees, it is creating some return for you. Even though you are investing just 100 rupees, you are ending up in the total loss of that 100. So what is the, how does it make sense? It is really nonsense. So before, even if we are expecting a down move or the up move in the index on its expiry day, but if it did not have that magnitude or that speed in that direction, our far OTMs are not going to generate any profits or any positive results. We are going to just end up in losses. That's why I would strongly suggest you, I would strongly recommend to buy, if you are option buyers, buy only ATM or ITM. Please make sure about this thing, because even if the market moves in your direction but slowly or in a choppy structure, your premiums are going to vanish. So please buy only ATM or ITM strikes options on the expiry of that indices or stocks. So only some liquid stocks, very liquid, highly liquid stocks, because even if they move in the choppy structure, the ATM or the ITM are really going to beat your expectations and give very good returns and profits in terms of percentage. Okay friends, thank you very much. Thank you for watching. Please like and share the video. Thank you very much.